As we expected it in our yesterday's video, after we opened our short position, we saw a massive sell-off. I already took $4,000 from that short trade. We are now remaining in $22,000 of unrealized profit. And the question that you are all asking yourselves, do we need to expect this correction to continue? Do we need to expect to get a massively bearish weekly candle close this week that could potentially lead us to correct all the way down to the $75,000 level? Or are there any signs more that we might reverse now and we can finally close our shorts and jump into new scalp long positions because we need to expect a new all-time high? Let's talk about this right now. Make sure to smash up a like. Don't forget to subscribe, activate the bell so you don't miss out on any future content. And now I don't want to waste any more time. I don't want to overcomplicate things, because if you overcomplicate things, your P&L history will not look like this. So let's go into the charts and let's talk about what to be expected next. And it is, for me, pretty simple, guys. We have been talking about our 11-year resistance and a rejection of the $108,000 since November. Now, we all knew that to reach a new all-time high, and I've been talking about this in my last videos as well, we will need to break the 0.618 Fibonacci retracement level to the upside. And after we saw a quite bullish daily and weekly candle close on the last Sunday, right, we were expecting that in combination with our uptrend channel, the price will reach the 0.618, and only then we can expect to jump into new short positions potentially if the price is not able to hold this level and especially is not able to confirm the breakout. And yes, for a moment it looked like we are breaking out of the 0.618, but we need to keep in mind what do we want to see for a confirmed breakout. We want to see that on the specific time frame we are looking at the candles. Now it's the 4-hourly. We need to see a 4-hourly candle closing above the old high point after retesting the support. But as we can already see, we never even made it clearly out of this resistance area. And when I uploaded my video yesterday and I opened my short, we were already back into the 0.618. So there were some danger signs that this 0.618 Fibonacci retracement level would actually reverse us. And keep in mind, although we are looking at the 0.618 on the 4-hourly time frame, this was actually a weekly rejection. This was actually a rejection that also occurred on the weekly time frames. And as you know, the weekly time frame is more strong than all the underlying time frames. If the weekly time frame is bearish, there is not really anything that the daily or the 4-hourly chart can do to suddenly make the price reverse extremely bullish. And what we need to keep in mind, and that's why we also were so careful, is we are below very important resistances and we were at the 0.618, and we didn't see a clear volume supported breakout above the 0.618, and that was the sign that this might be only a dead cat bounce coming in here for Bitcoin, and that's why we went short. Now we need to keep an eye on one specific price level still. In the very best case, we are able to form somewhat of a consolidation here, and we are forming somewhat of a reversal pattern even before reaching the normal main price target of this uptrend channel around the $91,000 to $92,000 level, where, as you know, we also find our very important support and resistance box. And if Bitcoin is not able to at least hold this $91,000 to $92,000 level, we need to keep in mind, with this weekly candle that shot up to the 0.618, got rejected there. If we close this weekly candle anywhere below $92,000, $91,000, if this weekly candle closes below, this would be actually a bearish rejection confirmation of our 11-year resistance and our 11-year support and resistance. And you know what that meant in the past? That meant that we will see the first and biggest correction that we so far had in this current bull market. And this would potentially lead us all the way down to the $75,000 level. So we need to find some strength. The bulls need to find some strength within this week to make sure that we don't see a weekly candle close, in the best case, even near the $91,000 to $92,000 level. What can you keep an eye on to find out if this is realistic? First of all, we want to see that on the liquidation heat map, we will get more and more short liquidation potential over the next couple of days. So we want to see that people are opening more shorts. As you remember, yesterday I was also talking about that there is still a lot of people jumping into longs now above the 100K level, which they didn't before. So this is a sign of FOMO, which the market makers 100% will use to liquidate positions, which also happened. As you can see, we liquidated exactly all of these potential liquidation levels here. And if we are forming now a big amount of shorts, right? That would be the first good sign, because that would mean the market is in over fear. So if we increase our amount of short liquidations to the upside, in combination for the next couple of days of positive inflows in the Bitcoin ETFs, that would be the best sign that we could get to know that this rejection is actually only a short-term small correction, and we still need to expect the price to go to new all-time highs. Because if we see, and the Bitcoin ETFs is the best indication for how the spot market is acting right now, if we see positive inflows throughout the next couple of days in the spot ETFs, we know that the spot market is bullish, and at the same time, the futures market is getting overly bearish and scared. And this is always a perfect moment for market makers, but also for the market in general, to reverse and actually retest the 0.618 again, break it to the upside, and finally reach new all-time highs. So these are the things I'm keeping an eye on, the Bitcoin ETF and the liquidation heat map, because right now on the chart, we will need around 24 to 48 hours to form any kind of potential reversal pattern or get a clear sight what the price wants to do next chart-wise. Because right now chart-wise we only corrected straight to the downside. So there's not much to say chart-wise besides the fact that we still haven't reached our bearish price target theoretically of this uptrend channel, right? So this is all we can keep an eye on right now. I will keep you updated in my free content. Keep in mind, guys, that I'm sharing not only my exact entries, my exact scale-ups, my exact take profits, always in real time with you on Levex. I don't have an affiliate link, nothing. You can completely follow me for free, no matter if you are signed up with another affiliate link, if you are signed up with my affiliate link. Just go on Levex, search CryptoMo, go to my profile, follow me there, and all you then need to do after you followed me is open your sidebar at the top here, go to exclusive content, and you will find all of my posts. As you see, yesterday I told you guys that I moved my stop loss in profit for this trade. Then I told you yesterday that I'm scaling my trade up by 25%. Then I told you that I'm taking 20% profits. This is the $4,000 in realized profit that we now already have out of this trade, right? And I will keep you up to date, besides my videos, on the things that I'm taking action on also with this trade continuously. So don't miss out. It's completely for free. You don't need to use a link. You can be signed up with any other KOL's affiliate link, and you can still follow me completely for free and get all the information and output from myself. But now, guys, smash up a like. Don't forget to subscribe, activate the bell, keep an eye on the Bitcoin ETF and the liquidation heat map. And besides that, I will update you tomorrow on my next trading steps. Most likely anyways. So just, as I said, subscribe, activate the bell, and guys, keep in mind, never overcomplicate things, because if you overcomplicate things, your P&L history will not look like this. But now, guys, we're going to see us. Bye-bye.